So I'm going to talk, I cannot do a presentation like this without talking about my favorite metal. I came from a copper company in the 90s. I put together First Quantum Minerals in 1992. As many of you know, became a very large copper company. I left that company in 2000, and I spent a couple of years looking around at other metals and thinking, okay, well, I got to put together another mining company. It was pretty obvious, between 2002 or 2002, with the Nasdaq crashing and what I perceived as the next bull market commencing in the metal space, I wanted to put together my second company, and I started looking around. It was so obvious to put together a gold company, but there's so many gold companies in the space, and coming from a copper company, someone believing in the supply-demand fundamentals of the metal, silver to me just made a whole bunch of sense. I did a bunch of my own due diligence and looked at the space. The silver space is a tiny market made up of only a handful of companies, and I'm looking at the supply-demand fundamentals over the next 10, 20, 30 years and beyond, and see, hey, this is a pretty exciting metal. And it was quite surprising. The mining ratio at the time, and this goes back to 2002, 2003, was around 15 to 1 approximately. And what that means is that for every 1 ounce of gold being mined on the planet, only about 15 ounces of silver were being mined. Today, that ratio has been consistently dropping. Just 2 years ago, that was 9 to 1. The latest numbers coming out of the mining sector for 2018 were 8 to 1. So we're, as an industry, only mining 8 ounces of silver for every 1 ounce of gold. And that's pretty shocking when you consider, where we're trading at 86 to 1. How does a ratio like that stay where it currently is for an extended period of time? There is a chart coming up which I'll show you. These periods do occur over time. It's only the second time or third time in the last 50 years that we've seen such a ratio like this. I'm a contrarian investor. That's why I put together a silver company. I think you as investors should be looking at a contrarian way of entering this marketplace, and you should really consider silver as being a key component to your portfolio. The miners worldwide mined approximately 850 million ounces last year. We consumed as a human race about a little over a billion ounces of silver. This deficit is continuing, and it's been going on for decades now. New technologies, and this is really the driver, I think, of the future of the metal price demand, silver price demand. Yourself, being here in Europe, it's pretty shocking for me, when Todd and I got off the airplane yesterday, arriving in Amsterdam, and we see Tesla after Tesla after Tesla, picking people up at the airport. And I've never seen so many electric vehicles in one space at one time in my entire life. It's pretty shocking. And I know every one of those Teslas consumes about 3 times more silver than a normal fuel combustion car. This is a snowball that is not going backwards. We all know we're getting off oil and gas. We're going this route as a human race, and we're going to require a ton more silver and a ton more copper. And these are the two metals. I'm a silver bull, of course, running a silver company, but these are the two metals that you need to have in your portfolio. I think First Majestic is, obviously the best in the space. I'm biased, of course. Now, solar panels, a lot of talk. I'm not sure how many people follow the uranium market that closely, but I'm not a bull on uranium. I used to be. I actually made money in uranium, on that big run up to $140 a pound, and did quite well on it. But I've changed my view quite a lot, since Fukushima, and what other governments around the world have been doing in this space. You fly over to Japan and see what's going on in Japan. This is a photograph of a U.S. mall where it's just covered in solar panels. This is the future. Governments want to go this route because they foresee this, or they look at this technology as a clean way of electrifying the planet. The Saudis are building the largest solar farm in the world. This solar farm in itself will consume 250 million ounces of silver over the construction period of the next 10 years. Why are the Saudis building the largest solar farm in the world? I think that tells you something. These technologies, you wouldn't be here today. I wouldn't be on this stage today. This presentation would not be possible today Everything that we do and take for granted would not happen without silver. And most of you probably don't even know how important silver is in your daily life. But think about it. These are technologies that we need and completely take for granted. And that's why there's a deficit in the metal, and that's why that deficit's only going to get worse. And this goes to the historic chart, where we saw, when silver ran to $50 back in April 2011, the ratio got down to about 31, 32 in that range, was in the 80s. We're now been in this persistent kind of bear market in silver for the last few years, and we're at this ratio, but I foresee that this is going to collapse, due to more historic levels, and I think it should get back to the 8-to-1 range. That's really physically where it should be. Whether it ever gets there, of course, is time will tell. But even if it gets down to 30 or 40, which is more traditional, that's pretty good for the silver prices. And many of you probably heard me talk about silver. I'm a triple-digit silver guy. At $15 silver, that sounds like a ridiculous argument, and don't tell me. I've been saying it for a number of years, but I think that's where we're going over the next 5 to 10 years. So let's talk about First Majestic. We are the purest silver company in the world. There's a chart coming up that will show us compared to many of the other silver companies that you probably are very familiar with. And at 60% or slightly north of 60% of our revenues from this sale of silver, how can we be the purest? 60%. But that just goes to show you how little silver is out there. That's why we're mining 8-to-1. That's why all these silver companies have gone into gold and bought gold mines, because there is an enormous lack of available silver in the world. We're 30% thereabouts gold, and the rest in the form of base metals. We have 6 producing mines, all in Mexico. We had a 7th mine, which we shut down in August of last year due to high costs and available capital. The portfolio is so large, there's only so many places we could deploy capital. So we did decide to shut down 1 mine, but we do have 6 currently operating. The stock is extremely liquid. It's one of the most liquid mining stocks on the planet. We're owned over 20% by GDXJ. Wheaton Precious Metals is our largest shareholder. Obviously, I'm a very significant shareholder as well. You can see on that bar graph, the growth has been there over the last couple of quarters as a result of acquisitions, which I'll talk about in a couple of seconds. But the market cap has been basically the same, 1.2, 1.1, 1.3, 1.5 in that range over the last literally 5 years. We've grown the business quite substantially over that 5-year period. The company is actually about, almost 3 times larger, 250% larger than it was 5 years ago. Yet the market cap is much, much the same as it was. We're really getting no improvement in that as a result of just where the space is. As many of you know, the mining sector has not been a great place to be over the last few years. We think that's changing. I do personally believe we're in the midst of a new bull market. Obviously time will tell. Our balance sheet is strong, and we're spinning off profits from a couple of our mines currently. So this is a footprint. We've got a large footprint in Mexico. We're very respected in this country. We've been actively investing in Mexico now for 17 years. We're the 2nd largest silver producer in the entire country, which is actually pretty significant considering Mexico is the largest silver producer on the planet. So being number 2 and the largest producers, quite the feat. We achieved that over about 15 years and continually hold that space. The 2 largest mines, San Dimas and Santa Elena, are really the 2 engines behind the company, and there's a lot of growth coming over the next couple of years in those 2 assets as well, which I'll try to touch on. But as you can understand, this is a very short presentation, and there's no way I'm going to get to all these assets today. But I do suggest, if you're interested, go to the company's website. This presentation is available on hard copy. Each one of these mines is described in the hard copy presentation. I won't be getting to them during this presentation. I'll just stick to high-level discussions on a couple of growth areas that I think you might be interested in. So, look, I'm not a geologist. I'm not an engineer. I'm a finance guy. I came from the banks in the 80s, and I like buying stuff. And I've done very well in buying assets throughout my career, and I've brought a lot of wealth to our investors and shareholders, not in this company, but throughout my entire career. And this is how I've done it at First Majestic as well. You know, we pulled off quite a significant acquisition at the end of 2015, and another very significant acquisition in mid-2018. And then that's how we've grown this business. You know, these mines do deplete over time. You know, these are underground mines, and if you don't have a strict M&A plan in place, it's very difficult to grow. Especially in this environment where the margins are just so thin. You know, these mines aren't making a lot of money at these current metal prices. Some are making a little bit more than others, obviously. And so the capital that you're generating through income has to be deployed to the assets to keep them growing. And there is a limit to that. So, you know, that's why you see Goldcorp, you know, being bought out by Newmont. That's why you see Randgold taking out Barrick, because they know, as well as I know, that it's way cheaper to buy a mine than it is to develop it from scratch. And the last two acquisitions, I could tell you quite clearly and honestly, that it would cost you at least 200% and possibly even as much as 300% more than what we paid for them to actually build them from scratch. And you know, that's a pretty unique place in the market cycle. You know, this is a 7-year bear market, and the miners have to take this approach if they want to grow. And we've proven as a management team that we're good at doing this, and we'll continue to do this. So as I said, the top two assets are they're really this two that really stand out, and they're 75% of the production, 90% of the profits. We got two mines there that are slightly in the black, and a couple of mines there that are slightly negative. The La Prie and Del Toro, you can see they're very, very small producers. You know, Del Toro's producing around 500,000 ounces of silver. La Prie is about 1.5 million ounces of silver. So it's not. Despite the fact they look like they're losing money, it's a very small amount of money. The other 4 mines are sufficiently profitable to keep the rest of the portfolio afloat, and we're looking actually we're actually making a significant investment at La Prie right now, which is really, we think anyway, is going to bring costs down there by a couple of dollars over the next 12 months. So. And also, these are huge land packages, record explorations going on now. So, we're continually advancing these projects. And this is how we do it, by spending money. And this, as a management team, you have to be very nimble. And I think we've proven that, throughout time, throughout our 17 years. You go look at 2012, for example, silver is around $40 an ounce. 2013, where silver's mid-30s, low 30s. It wasn't until 2014 that silver actually broke down and it actually, unfortunately, hit $16 an ounce in June of 2014. You can imagine how devastating that was for us and the rest of the industry. We're spending $200 million a year on expanding and growing this business, and the rug got pulled out from underneath of us. And what did we do as a business? We had to start cutting our costs, which I think we did extremely well. Over those periods of 2014, 2015, we started losing money. Through a couple of good acquisitions and some cost cutting and some substantial cost cutting, we were able to get back in the black at the end of 2016. We actually made about $130 odd million in profit in 2016, and we plowed that into the business in 2017 and 2018, and we're continually doing that today. But with two world-class assets in our portfolio, this allows us to invest this type of money without going back to the public markets for capital. We can do this from cash flow. And you're going to start to see throughputs go up, and of course with exploration and record exploration programs going on right now, 30 drill rigs, or actually more than 30 drill rigs active, and this has a direct result on increasing reserves. And when you get reserves increases, you get grade increases, you get throughput increases, and then of course what happens? Costs start dropping. But this is only a couple of years into this. you know, it's very, very, very exciting for the next couple of years as we start to see the results of this type of investment being made on the ground. So I'm going to get into two mines, the San Dimas. So this San Dimas mine, it's been in my eyesight for a decade. And I'm very patient. I'm probably one of the most patient acquirers there is in the space, and likely probably one of the most aggressive as well. But nevertheless, you know, I made two separate attempts prior to being successful on this asset, and then finally it came to us. A series of events occurred, and the stars aligned, and we news released the acquisition of this in early 2018. It came into our portfolio in mid 2018. It's you know, 13 million ounce silver equivalent producer, 50% gold, 50% silver. It's been producing for 300 years. We'll be producing for more than anyone in this room cares. It's got a, you know, a 43-101 life of mine of something in the order of 20 years, but it'll be producing way, way more in the future. Like you see the grades on this slide. You know, it's you know, 260 grams silver, you know, almost 4 grams gold. You know, these are amazing grades. You see the costs, you know, are $5 an ounce, all in sustaining costs. The cash that this mine is cash flowing is just enormous. And look, if we have $20 silver, this basically becomes a bank. It's that profitable of an operation. There's a couple of negatives, obviously. You know, these types of assets don't just fall on your lap for a reason. The company that financially engineered into the ground ended up getting itself in debt, and the banks pulled the plug, and we got a phone call from a couple of banks and asked us to come in and rescue this situation, which we did. And we recapitalized the business. We paid off all the debt, and we've improved it already in a very limited time. When we took it over, the cost per ton for mining was $165 a ton. It's now around 110 or so. We think those costs will go down even further over the next 12 or 18 months. We've got a fairly large capital investment scheduled for 2020, where this mill is going to be rebuilt because it's very old technology. It hasn't been updated for about 2 decades. So we're going to be doing some pretty interesting upgrades of this operation, which is going to have a very positive impact on throughputs. So we expect higher throughputs and also costs. Big land package, you know, very prolific part of Mexico, 70,000 hectare land package. Very tiny part of it's been explored, tons of upside, lots of potential. The mill, this is a bunch of bullets here. You know, these are things that we're going to be, I heard the comment about environmental footprints on mining and so on and so forth. And, you know, as a Canadian mining company, we have to follow Canadian legislation, despite the fact we're in a foreign jurisdiction. That's the laws that we have to, the board of directors is actually liable in foreign countries under Canadian law. So these are technologies that'll reduce the environmental footprint of this operation, which we've done throughout the company at all our other operations over the last decade. But these are very exciting things that we're doing over the next 12 to 18 months at San Dimas to really turn this, well, not so much turn it around, it's doing great, but I mean really to add and bring efficiencies to this operation. Growth projects, I see I only have a little bit over a minute here. ENCANTADA, you know, this used to be it used to be our largest mine actually, going back a few years, but as a result of acquisition is now our 3rd largest mine. But it's getting some investment. We've been building this roaster, which you can see in this red circle, for the last 2 years. It's a very complex piece of equipment. It's the largest roaster in Mexico. And what it does, it recirculates the material from these tanks in the foreground and puts it through a second process, breaks the chemical relationship between the different metals, and it goes through this process a second time, and it produces an extra 1.5 million ounces of silver. It's been running, it's got up to close to 1,000 tons a day in March. We hope to consistently be running at about 2,000 tons a day in the next few months. So we're pretty excited about that. ENCANTADA costs are going to drop as a result of this, so it's going to start cash flowing nicely once this roaster is up and fully running. Santa Elena is another mine. It's our 2nd largest mine, 5 million ounce producer, highly profitable. You can see that it's, you know, producing silver at $2 an ounce on an all-in sustaining basis. Big cash flow engine for us. but it is getting investment. This is a geological discovery, which is going to add a huge amount of ore to this operation, but I won't get into it. New technologies. I was in Austria last August. These are pictures I took personally myself. This machine just arrived at Santa Elena. That's why I was showing you Santa Elena just last week. It's now being installed. This is a new grinding technology produced by a Finnish company, manufactured in Austria. And we ordered 3 of them, one for Santa Elena, one for ENCANTADA, and one for San Dimas. The first one's now arrived, as I said, at Santa Elena. So look for lower costs, higher recoveries, more metal being produced as a result of this technology. This technology being put into La Pria, and I touched on earlier, you saw the costs were a little bit high at La Pria. This is going to help us reduce costs at La Pria as a result of this new technology. So these are things we're doing as a business in a challenging environment like this, when you're seeing no money in development, very little money in exploration, grades are dropping, prices are dropping. What do you do to counteract that? You do use technology. And we're one of the leaders in this area, and I'm very proud of our team to be able to bring these types of technologies into our business. And you can see the blue solid line there. That's a recovery. That's the amount of metal you're taking out of every pound of rock or every ton of rock. And this drops right to your bottom line. It's very interesting. And other catalysts, the biggest one here is 0.3, the LNG. We've only got 1 mine left on diesel. We converted our second last one on diesel went to LNG 2 years ago. Now, after running that successfully to 2 years, we're now moving our last mine to LNG. So we're pretty excited about that. Again, environmental comment, very important. And silver purity, this is the last slide. You see where we are in the space. Pretty shocking. When I put this company together 17 years ago, most of these companies were over 50% of their revenues were in the sale of silver. Now there's very few left. We're really the one that stands out still today. So it's really the go-to story for silver. Oh, pardon me, this is my last slide. Record short position, over 30 million shares short. Almost 20% of the issued outstanding are short. And that's the view on silver. As many of you know, on the COMEX, there's a very, very large silver short. We're picked on because of our leverage to silver. So that's a great opportunity for investors, I think, to take advantage of. And jumping along, that's it.